your retirement fund is going to be drained to cover your neighbor's debt. Many people believe that debt is borrowed against a mountain of gold hidden behind bank walls. At one time, it was, which is why people still believe this. But did you know that in the 1970s, the banks broke away from the gold system, and now debt is just created out of nothing? Who cares? Well, we should. That lack of gold to back up funds is now being replaced with people's lifetimes of retirement savings that when they go to use it, won't be there. Let's learn more about how we got into this mess, why the debt crisis matters on a personal level, and what the heck we can do about it. Before we get into why your retirement is at risk, first we must understand why gold was used as the standard monetary system and why it worked. For thousands of years, barter was the main financial system, until one day, money was introduced. Gold, silver, copper, and iron became the main forms of currency, and jewels had a background role to play thanks to their rarity. The next leap came in the form of banks, which was first explored by India and the Knights Templar. India already had a system in place of storing precious metals in a safe house, with only an official document as proof. With that document, you could withdraw what you needed or even trade with it. The Templars picked up the idea from India and streamlined the process so much, and they added a tax to that service, that they quickly became richer than the Catholic Church and all the kings and lords combined. Their system was genius. This is a whole history lesson, full of all the juicy intrigue and murder plots that will put a Game of Thrones plotline to shame, but that is a story for another day. The point is, they streamlined banks, loans, interest, and reserves to the point that they paved the way for our working system today. Back to banks and gold. But why gold? It's pretty enough and relatively rare, sure. But it isn't exactly robust. Gold is soft, and handling it causes flakes to chip off, meaning that it literally loses value the more it's handled. It's too heavy to carry a whole lot of it comfortably, so it's not exactly the ideal material to work with. China was the first to bring paper currency into circulation, and it was used in gold's place. From there, paper money and stamped papers began to circulate, essentially replacing gold altogether. But this brings us to the first snag in the road. Countries print money, but what happens if they don't have physical gold to tie it to? In the US, the currency gained more value than the state had in gold stores. We just didn't hold mounds of gold in vaults anymore. So in 1945, the decision was made that you couldn't just barter with gold anymore or exchange it for paper money. Your paper money and the country it hailed from was now compared to the US dollar. The dollar was tied to gold and later oil, but only banks could use it as an exchangeable item, not us common folk. By the 1970s, the gold standard was done away with, and no currency was tied to gold from that point forward. Now, the dollar is backed solely by confidence. Yeah, the US dollar is valuable simply because people believe in it. I don't know about you, but given the current political state in the US, that seems a very flimsy way to put value in anything at all, but we digress. Putting value in a currency based purely on investors and human beings in general means that this value is constantly fluctuating. So, what does this all have to do with your retirement? The issue is, when debt is given, it is now given with no reserve, meaning endless debt can be created. So what happens when hundreds of thousands of people have debts they can't pay? Businesses, student loans, mortgages, etc. People are unable to pay for their debts, spending dries up, the economy dwindles, but there is no way to rebuild because that debt still exists with no way to pay it. If we can't repay debt, what do? The bigger issue is banks are now having to pull from savings and retirement funds when they do need to provide cash. Those safe and secure systems people have paid into their entire lives are now in jeopardy, and people don't even know it. Since the U.S. is no longer bound to gold and solely on trust, that means that if there's a crash, everyone's savings goes down the drain. Because when you deposit money into a savings account, the bank can do with it what it wants. The U.S. government has stakes in every major industry in the world. They use those savings to invest in mines, new industries, and quite a few very unpredictable stocks on other continents. Sure, the amount on your screen stays the same, but it's being used in a million different ways to make the country richer. The only thing keeping your money available is the faith that there won't be a mass withdrawal from half the population overnight. If even just 30% of all savings gets withdrawn today, there will be nothing left in the whole savings well, and everybody is screwed. At the rate that we're going, the estimates state that by 2033, the government won't be able to pay for Medicare or Social Security. In other words, they've gone into full-on inflation fighting mode, or preparing for it at least. What this means is that if the U.S. can't pay back its debts anymore, it has every right to dip into your savings. Obviously, they're hoping that a little bit here and a little bit there won't affect the main pot in the long run, since there's always something coming in to supplement what they've used. Again, your account stays the same, on the screen at least, but we've got a population balance problem. The older generation makes up most of the savings and retirement funds. The current generation is barely getting by. With rising costs for housing, utilities, and just the basic everyday necessities, they are going deeper and deeper into debt. There's just no room for savings if they can't even make the basic ends meet. Ironically, the new generation is by far the most educated, yet they're making less money than ever. They aren't putting back into the retirement and general savings accounts that the government is moving around so liberally, and neither are the older generations. They did all of their savings during their working days. Now they're cashing out to retire. There's more money going out of reserves than there is going in. If the downward trend continues, the first thing that's going to be affected is Social Security. Already our veterans are losing out. Next up is spousal support and retirement that will get slashed. Then some of the medical care options will get deducted. Simple things like dental care will default to pulling a tooth as opposed to crowning it. Or if a condition isn't life-threatening, it just won't be covered anymore. Those who are retiring won't have anything to their names, and their care will default to their extended families. That 6.2% that goes off your paycheck every month, plus all the taxes on other things like items, property, etc., will be used almost completely to pay off debt, not to cover you in your time of need. And when a country begins to take from its people, trust in the system begins to falter. And now we circle back to gold. Has this problem never happened before? It has, many times. Historically, there were systems to forgive debt. In the past, this was done through a nation's treasury with its stored gold. Even in the Bible, the Israelites were commanded to forgive debt every few years. It's not like it was just forgotten about. The industries that were owed money would have crumbled and the entire economy could crash. The crown spent years buying up treasures and valuables, mostly in gold, and delivered the people's debts to the industries that they were owed money to. Yes, the reserves took a hit, but just like Joseph saved up grain for 7 years during Egypt's famine years, so did they prepare for just such an expense. They planned and worked for it. When the reset year came, they started from scratch the next year. With the public relatively well off and not crippled by debt anymore, their industries kept the nation well above water until the vaults recovered. The Mesopotamians did it, the Babylonians did it, hell, even the European royals had periods of debt forgiveness. But now there's no gold. There's nothing in the treasury. So where's that debt supposed to be paid from? Well, it's going to start with your savings, your retirement, Social Security, and basic medical care. Can we somehow manage to recover from the horrendous reality of digging into the public's funds without any immediate means to pay it back? The point here is that all of those dollars you saved up for the past few decades, your blood, sweat, and tears, it's possible that it could all disappear in the next 10 years. And if history is anything to go by, once leadership decides to dip into the resources of the elderly and the working class, recovering from that is virtually impossible. Society and how it's weaved into each other will be unrecognizable by the end of such an upheaval. Poland, Belgium, South Africa, and Ireland are currently in just such a process to bail out their crippled banking systems and the fallout from the funds that the government bled during the pandemic in the hopes of getting the economy back in shape. So we'll have a modern example to compare outcomes to at least. But already the moves are starting to show cracks and possible corruption as all those billions pass through so many hands. Maybe we're being pessimistic. Everything will go according to plan. All debts will be forgiven. The money taken will be paid back before anyone is affected too heavily. Heck, maybe there will be a huge economic boom that can solve the problem before we even have to go to those lengths at all. Historically, global war has been a real winner, economically speaking. So what should we do? Diversify. Create a strategy for diversifying retirement so you aren't holding all your eggs in one basket. Did you know most millionaires have 7 streams of income? Same idea. You could start by taking advantage of employer-sponsored retirement plans like 401ks or 403bs, which often include employer matching contributions and offer significant tax advantages. Additionally, contributing to individual retirement accounts, IRAs, whether traditional or Roth, can provide further tax benefits and flexibility. Traditional IRAs may offer tax-deductible contributions, while Roth IRAs provide tax-free growth and withdrawals. Consider annuities for a guaranteed income stream in retirement. Fixed annuities provide consistent income, while variable annuities offer potential for higher returns based on market performance. Health savings accounts, HSAs, are another valuable tool, offering triple tax benefits: tax-deductible contributions, tax-free growth, and tax-free withdrawals for qualified medical expenses. After age 65, HSA funds can be used for any purpose, with taxes applied to non-medical withdrawals. Investing in a diversified portfolio of stocks and bonds is a strategy as well. Dividend-paying stocks can offer regular income, while bonds provide stability. Real estate investments, including real properties and real estate investment trusts, REITs, can generate income and potential appreciation, serving as a hedge against inflation. Regularly review and adjust your retirement plan to ensure it remains in line with your goals at every changing market condition. Working with a financial advisor can provide guidance and help optimize your strategy. Diversification is important to build a resilient retirement portfolio that can withstand economic uncertainties. Consulting with a financial planner can help tailor these strategies to your specific situation, ensuring a robust and diversified retirement plan that mitigates risk and maximizes potential returns. So what do you think? Now that we have broken free from the gold standard and watched debt climb out of control, do we need to panic? Are there new systems we can engage to protect our communities, families, and loved ones? What do you think countries will do to untrench themselves from all this debt? Give us a follow, like, and let us know your thoughts in the comments, and we will keep bringing you economic topics to help you stay ahead of the curve and plan for a better future.